You are listening to chartingwealth.com for Tuesday, the 12th of January, 2016. What's really going on in the market? Well, we always start with IYY, which is the total market. It's an ETF that tracks the entire market. What do we see happening? Well, we see three two-day candles, strong downs. Now, technically for the day, the market was up 0.16%. We're well below our two-day trend lines, which we've connected three candles. If we go to the 4-hour chart, now again, we use the Hinki Ayashi type of candlesticks, and they are related a little differently than your typical candle. The reason we use those, and you could read more about them at our site, is because it's a much more accurate predictor of where the price movement's really going. We have a two-day trend line. We are well below that on our 4-hour or half-day chart. We crossed over on that 4-hour chart going down back on the 4th of January, slid sideways around the 5th, and then dropped off the deep end on the 6th again after the big down on the first day of the trading year when we got back on Monday of last week, and we can see hard downs continuing. Now, will it bottom out soon? Of course, it probably will. It may digest these huge losses over a certain amount of time and then move back up. What are we waiting for as far as looking for a time to get into this down move if you did not get in at the right point there on the 31st or on the 4th? Well, what we're waiting for is we are waiting very patiently to see to it that the markets bottom out, level out somewhere on the 4-hour chart, roll back up as we saw happen on the 23rd, and then roll back over again for a buy-in point. That's what we're waiting for and looking for. So we need to see that happen before we can make any moves or guesses at being able to get into any kind of trade. Now, next we'll zoom back out to our two-day chart, and we will go to the SPY. Looks very similar. It was actually up 0.10%, but again, we see three, for those that are just listening by audio, we see three-day down candles. I'm sorry, three two-day, so 6 days worth of down candles. But the market actually had started going down well before then. It crossed over going down back on the 2nd of December, right at the end of November. So none of this is new. Now, what do we see happening on our 4-hour chart? Well, we see, again, a trudging down very similar to what we saw on IYY. The total market, the S&P 500, is doing very much the same thing. Again, just up 0.10%, but that does not change what's actually going on in the market. Still waiting for some bottoming out, which has not occurred yet. Maybe a ways in coming, but the market digests losses as well as it does gains. And it'll turn around sometimes with a dead cat bounce, as we saw happen around the 5th of January. After a big drop on the 4th, it sort of digested those gains and then dropped over again. So we'll continue to watch. Maybe some good news or something will buoy the markets at some point. Maybe the Fed will make an announcement of some kind. We'll continue to watch and just see what we see with the China meltdown taking, again, a big toll on everything, the China potential recession. So now we're going to zoom back out to our two-day chart, and we're going to take a look at the Qs, up 3 times what the S&P was, up again just 0.33%, but again 3 big down candles, lots of down movement. Derivative oscillator heated up even further, and we have sizable down moves overall on our big chart. We revert to our 4-hour chart. Again, still about the same down pace, could be leveling off some, but we're still well below our 2-day trend line. So all of our big indexes confirm down moves on the big charts and the small charts. Do not catch a falling knife. We got to wait until we get a bottoming. It rolls back over, makes an up move as it did around the 23rd of December on the Qs, that is the NASDAQ 100, and then rolls over again if you're going to be able to capture any down move. Now you might say, well, what if that doesn't happen? Then you don't have a trade. That's the beautiful thing about not having to be a professional trader who has to trade all the time. We only trade when everything is in our favor, because the trick is, first, not to lose money. Second, to make money. That's what it's all about, being smart. And of course, we're not a stock calling service. We're not telling you about making actual trades. We're talking about what? Virtual trades. That's right. We provide our educational information here on these podcasts for free. There is no charge, and we are not giving you trading advice. Now, lastly, let's range out and take a look at gold on our 2-day chart. What do we see? Well, we see gold making, again, sizable up moves starting on the 5th of January. Continue to move up. It actually crossed over going up back on the 16th of December. Now, if we revert back to our 4-hour chart, what do we see? Well, our 4-hour chart appears to have leveled off. It's not crossed over going down yet, but it may be soon. We're still above our 2-day trend line. Folks, that is where we are at the end of the day on Monday as we go into Tuesday, the 12th of January. Hope that you are excited about the market, seeing where things are going. If you want to learn more about how to read a stock chart, which is what any investor, any trader needs to know first and foremost, so you can pay attention to price movement in the market, that's what's so key, being able to read those stock charts. You can learn that and figure that out by listening to our How to Read a Stock Chart video. And that is available for free to everybody who subscribes to our daily podcast. All you got to do is go to chartingwealth.com, sign up, we'll send you that. Also, as another bonus, we'll send you the layout that we use at freestockcharts.com. Thanks so much for listening. We appreciate you being with us from chartingwealth.com.